All right, Matt, it's that time of the quarter. Earnings season is wrapping up here, and listeners know that we talk a lot about the payment space, the war on cash basket that we've enjoyed covering here, and that is PayPal and Square and Visa and MasterCard. So we wanted to go ahead and give our quarterly review with the war on cash basket, see where these companies stand after this most recent earnings season, and to give listeners a quick update on this basket and where it stands from a returns perspective. Since the date of inception, which is July 24th, 2017, the war on cash basket is up 65.2% versus the market's 9.1%. And those numbers are good as of about 1 o'clock Monday afternoon here on November 19th. Wanted to make sure to get those as updated as possible, Matt, because there's a lot of blood on the streets out there today in the market. And some of these names, it looks like they might be going on sale, huh?
Yeah, pretty much anything involving tech has been getting hammered. Not happy about it from watching my portfolio every day, but hopefully we'll be able to shut up about these one of these days and we can all buy a few more and take advantage.
And that's a nice part about the holiday season. We have a couple of days off here and there so we can just be quiet, right? Well, let's just kick it off here with PayPal real quick, just to give you an idea of what was going on with PayPal for the quarter. Total payment volume was up 24% to $143 billion. Transactions, which is engagement, that grew 9.5% on a trailing 12-month basis. And another encouraging metric here, mobile payment volume of $57 billion was up 45% for the quarter. So all in all, PayPal doing a lot of what we just continue to see it do quarter in and quarter out. And I think really what I want to keep an eye on, at least, is with Venmo. And while Venmo is bringing in good numbers, right, the results are there. $17 billion flowed through that Venmo network for the quarter, and 24% of users are now participating in monetizable action. But it's also worth noting that this quarter didn't reflect the price increase that users of Venmo are going to start feeling here in the coming quarters in regard to the instant funding aspect of the network there. So I just think Venmo is as encouraged as I am by that part of the business. It's also worth noting that PayPal on its own is doing quite well. Let's keep Venmo on our radar. Make sure that they're not rushing to monetization here. You don't want to scare those users away. But all in all, I felt like it was an encouraging quarter for PayPal. Matt, tell us real quick, what were your takeaways for Square's most recent quarter?
Square doing great on just by the numbers. Looking at adjusted revenue up over 60% year over year. Subscription revenue, if you back out acquisitions, almost doubled, and that's without the impact of acquisitions. The thing that stood out to me most is that their margins continue to expand year over year. Just kind of looking at the numbers, the adjusted margin is 16% this past quarter compared to 13% a year ago. And in their core payment processing business, the profit margin on those transactions has gone up to 1.07% from 1.05%. And 2 basis points may not sound like a lot of margin, but it is when you're talking about, pennies per transaction, like a 1% margin. So Square is doing great. The stock has been absolutely hammered lately. They're down 35% since just the end of the quarter. And it's all because of things that are likely to be very temporary headwinds, have nothing to do with the growth story. The CFO, Sarah Fryer, left. They just announced she's leaving earlier than planned. She actually left last Friday. Jack Dorsey sold some stock. The market's not that happy that Square's getting into the personal credit business. But this is a company with tremendous potential for growth, and they're achieving that potential. The growth has been sustained for a long time now, even accelerating in many ways. So Warren Buffett made his bold prediction about Wells Fargo. My bold prediction is that in a decade from now, Square is going to be the most valuable of all 4 war on cash basket stocks.
That is a bold statement. I like it.
So,
I like it.
It's time to be bold here.
Hey, listen, Square, that's by far and away the higher risk holding of the 4 in the war on cash. And really, that was the point behind the war on cash basket there, was to have a little bit of exposure to all areas of risk there. So Square giving you the higher risk. We talk about our market leaders in that basket. Visa certainly one of them. I mean, not much to say here. It's relatively status quo for the largest card company out there. Everybody, I think, has a Visa card in their wallet at this point. Payments continue to grow nicely. The company is immensely profitable. I think the only real criticism that I have with Visa was just in regard to the dividend. I mean, they raised their dividend recently, but it was a very, very modest amount, where I feel like Visa and MasterCard could probably do a little bit better on that cash in the pocket for shareholders. They continue to repurchase shares. Share count's down more than 12% since 2013. But you look at the company's payout ratio, and I think these numbers are fairly memorable here. Their payout ratio is around 19%. Since 2013, it hasn't exceeded 23.6%. And that's all to say that they can absolutely afford that dividend, and they can afford to grow that dividend. So again, nothing really terribly surprising with the quarter. It was a good quarter. I just frankly would love to see them raise that dividend a little bit more for shareholders, but maybe that will happen in time. What was your takeaway with MasterCard?
Yeah, I could kind of say the same thing. Neither Visa or MasterCard is a high dividend stock.
Feels like they should be, though, right?
They should be. I think they will be once the war on cash is in the, right now we're in like the second or third inning of the war on cash. Once we're in the seventh or eighth inning, I think we're going to see them become actual high dividend stocks.
There we go.
I like that they're buying back shares. MasterCard spent over $1 billion on repurchases in the third quarter alone, and bought a bunch more in the first little bit of October to take advantage of the weakness. So I'm definitely a fan of when companies take advantage of price drops by using buybacks. So I have mixed feelings about it. I would love to see them pay a little bit more of a dividend, but at the same time, I understand, one, the importance of investing cash back into the business, and two, of buying stock, especially when the market's volatile like this. So just like Visa, MasterCard's business looks great. Everything's growing at pretty much a double-digit rate. Revenue's growing faster than expenses, which is really nice to see. And international revenue is really taking off. Cross-border transactions up 17% year over year. So these companies are growing. So there's definitely an argument to be made that the money they're investing back into their business and not paying out as dividends is being well spent. So like I said, I have mixed feelings. I think eventually within the next 5 years or so, I think you're going to see them really prioritize dividend increases as they grow into the new cashless society.
Well, that's a very Buffett-esque quality, right? They feel like they can do more with that money right now as opposed to paying it out in the form of dividends. So, I mean, from that perspective, I agree with you. I think that makes a lot of sense, and at least that's encouraging. That's a glass half full way to look at it, man. Thanks.
Yeah, it's tough to argue with that logic when they're producing double-digit growth rates.
Yeah, listen, I'm a happy shareholder either way. Don't misunderstand me.